Dear Fatih Bey, Abdullah Bey, distinguished members of DEİK, and dear participants, good afternoon. On behalf of Standard Chartered Bank team, I would like to welcome you all and thank DEİK, particularly to DEİK Turkey South Africa Business Council and DEİK Outbound Investments Business Council for organizing this webinar on Outlook on Sub-Saharan Africa. By way of a very brief introduction, my name is Kashif Atun. I am currently the CEO and the Global Banking Head of Standard Chartered Bank Turkey, based here in Istanbul. We're all very pleased and honored to be part of this webinar and be part of these discussions on Africa. As Standard Chartered Bank, we have a wide presence in many parts of the globe and with extensive presence in Africa. As you're all aware, Africa is a very diverse region and represents medium and long-term opportunities for the investors. Development of Turkey's economic ties and increase in trade and investment with the Africa continent has so far been remarkable, certainly with prospects for future growth. Today, in partnership with DEİK, we will have our speakers based in Kenya, Nigeria, as well as in London, to talk to you about the future outlook and prospects in the region. The speakers will touch on many aspects, including the economy, impact of COVID, challenges, as well as the opportunities in the region. Before I pass on the floor, once again, I would like to thank DEİK for giving us the opportunity and wishing you all a very productive session. I now would like to leave the floor to Fatih Ebiçlioğlu, DEİK Turkey South Africa Business Council's chairperson, to give his opening remarks. Fatih Bey, floor is yours.
Thank you, Kashif Bey. Distinguished guests, ladies and gentlemen, as a chairperson of the Turkey South Africa Business Council, it's a great pleasure for me to be addressing this significant gathering. First, I would like to thank Standard Chartered Bank for their sincere cooperation in organizing this event. With their truth, leadership, and contribution, we managed to bring together like-minded people, business people, to discuss the prospect of doing business in Africa, despite all uncertainties stemming now predominantly from the pandemic. Those who are with us today believe in a fair, better future for Africa and want to be part of this promising story. Indeed, political and economic analysis of all reliable institutions attest to the fact that Africa will assume an increasingly important global role by the second half of this century. The economic potential and geopolitical weight of continents have already started to attract a vast number of countries and investors. Africa has managed to make important gains in recent decades. In sub-Saharan Africa, GDP growth has averaged 5% per year in this millennium. For the entire continent, the rate is only slightly lower. Africa is the world's youngest and fastest urbanizing continent. African cities will host 24 million new citizens each year, on average between 2015 and 2045. This is more than India and China combined. Africa has 60% of the world's uncultivated arable land, so it can produce 2-3 times more cereal and grains, with similar increases in horticultural crops and livestock. other opportunities lie in infrastructure. Africa will still need around 50 billion additional spending each year to upgrade its energy, water, transportation networks. Africa also has 10% of world's oil reserves, 40% of its gold, and 80% of its platinum. Ladies and gentlemen, if the continent managed to start and sustain a wide scope institutional transformation, strengthening its political, legal, and administrative framework, then Africa can emulate China's rapid rise of last 50 years. In this regard, we believe the Africa Continental Free Trade Agreement has been a very significant positive step forward. This will be the largest free trade area in the world since the creation of the World Trade Organization, bringing together 53 African countries with 1.2 billion people and over $3 trillion in GDP. The potential for the continent is there, but drivers of the growth require visionary political leadership. The rest of the world needs to help Africa in this vital transformation. Turkey has historical strong relation with Africa and aims to develop them to political, humanitarian, economic, and cultural grounds. Our country has defined and committed to new multidimensional Africa Partnership Policy since 2013, which is built up upon the foundation laid during the previous decade. The number of our embassies in Africa was only 12 in 2002. It increased to 42 at the end of 2019. Of course, today our focus is business and DEİK, which is Foreign Economic Relations Board of Turkey, act like the civil business ambassador of the country around the globe. We are now a 35 years old institution. The main responsibility of DEİK is promoting foreign trade and investment relations of Turkey. In doing so, our main strength is growing global vision and relations network of Turkish entrepreneurs. DEİK is mainly an umbrella organization consisting of 146 country consuls, 5 sector-specific consuls, and 2 special-purpose consuls. It is business people leading the business consuls, determining the business priorities, and gathering with business counterparts, just as we do today. Dear participants, I believe the Africa-Turkey partnership will endure the COVID-19 pandemic and continue to grow stronger. We adopt a long-term, forward-looking vision for Africa, and that's what we see in very promising. There are many opportunities for furthering the business relation in certain sectors, and of course, specific challenges to be addressed, such as banking and investment finance, thus increasing the cost of doing business. Today, we will have the opportunity to discuss them all. Thank you for being with us and for your kind attention. Thank you.
Thank you, Fatih Bey. Now I would like to turn the floor to Dr. Abdullah Çerekçi, Outbound Investments Business Council Chairperson, to give his opening remarks.
Thank
Abdullah
you.
Bey,
Thank you, Mr. CEO, Mr. Atun, and all the executives of the Standard Chartered Bank and all guests. And this is, I think, a very nice event. And also thank you for all the organizers. I'm sure this event will enlighten us on latest updates of business environment on Sub-Saharan Africa. And I hope all the participants will enjoy the discussions to develop new commercial ideas today. On behalf of the Outbound Investment Business Council at DEİK, I would like to welcome you to this timely event. Dear guests, the most certain developments that will take place in the next 20 years will be around demographic changes as global population growth slows and the planet ages rapidly. Developments including health, education, and poverty reduction have made strong gains in all regions over the last few decades. However, with the uncertainties, especially arising from the COVID-19 pandemic, the next stage of change will be more complicated and complex. Prior to the pandemic, if you look at the economic situation for many countries in sub-Saharan Africa, it was positive. The region has the fastest growing economies in the world. However, the global attempts to fight with the pandemic have impacted the economies, all you know. And the region's economy didn't grow in 2020. I mean, this is the first time in 20 years. Although the pandemic is a global tragedy affecting both wealthy and poor countries, the recovery is expected to be less even-handed. The uncertainties around the vaccination programs will most likely make the African continent the slowest growing region in 2021. I hope and I believe these challenging days will be over and sub-Saharan Africa will have regained its upward momentum in the shortest time. Dear guests, although increasing commodity prices nowadays and easier financing environment globally will be supportive for the continent in the short term, but the continent's structural problems will remain. Many countries in the region are still constantly unable to provide clean drinking water, electricity, and other essential necessities. Approximately 600 million population has no access to electricity and 110 million population is in need of immediate humanitarian aid. The prospect of foreign direct investments, international readiness to continue servicing African debt, and the uncertainties of commodity prices are all factors that may influence the continent's economic trajectory in the long term. We will observe all these in the coming years. Foreign spending in Africa will probably decrease in the next 1 or 2 years because of COVID's recovery efforts of major global economic blocs, and as a consequence, a reduction of investments in the infrastructure zone and humanitarian assistance is expected. I would like to point out that the region requires doubled or even tripled annual investments to close its infrastructure gap. Dear guests, Africa seems to be making important moves for integration. Africa's mutual standing in the global economy is expected to rise in the coming years as the African Continental Free Trade Agreement enters into force early this year. The agreement provides an incentive for regions' governments in handling the near-term impact of pandemic-related travel restrictions, exchange rate instabilities, logistics interruptions. In a long-term perspective, the trade agreement will also improve the internal trade volume, which will enable economic and social developments across the continent. Another important development will be the access to the technology, which is expected to expand over the next 5 years. And smart technologies introduced during the pandemic are likely to lower entry barriers. Countries with technology centers and software development cultures, such as Kenya, Nigeria, and South Africa, may increasingly exploit capital to develop innovative solutions. Ladies and gentlemen, African countries have always been considered by Turkish contractor companies as important project destinations. The total investments contracted by the Turkish companies exceeded a value of $75 billion US. On the other hand, a long-term investment perspective is not yet at the desired levels. I believe we will see an increasing trend of Turkish investors' long-term commitments, especially through public-private partnership projects in energy and transportation industries. As a final remarks, I would like to introduce very briefly Outbound Investment Business Council at DEİK. Our council has a vision of becoming the leading corporate organization that serves as the solution partner to private sector in their foreign investments. Through our events, we address outbound investment trends and strategies, country-based investment risks, financing environment, and many other topics. My major investor groups in Turkey are part of our council. I would like to also invite companies that have outbound investment plans to work with us in our council. Thank you very much again, Mr. CEO. I hope we all have very important takeaways from this valuable event. Hope everybody will enjoy. Thank you.
Thank you, Abdullah Bey. Now we'll move on to our next agenda item. And Razia Khan, our colleague who is based in London and who is our head of research responsible for Africa and Middle East, will be giving her views on the outlook, economic outlook of the region. Razia, over to you. You may want to introduce yourself a little bit more.
Thank you very much, Kashif. My name is Razia Khan. I've already been introduced, I think, by my colleague Kashif. I have been working at Standard Chartered for over 2 decades now, covering many of the emerging and frontier economies in Africa. And we've heard a lot from our colleagues at DEİK about Africa's potential. I'm going to do 2 things today in my formal presentation. The first is to talk about some of that potential, what had driven Africa's growth in the past, and then, unfortunately, because of the COVID crisis, the recognition of where we are today, the challenges that different economies have to surmount, but where we see progress being made and what we still think will be very good opportunities for foreign investors in the region. So let's start off, first of all, with a recap of Africa's long-term potential. Why should investors be looking at Africa? Many of the speakers today have already mentioned the demographics. Africa is the youngest region in the developing world. But much more than that, we think when we look at the demographic profile of the region, that for some time now, Africa has been going through a demographic transition. In the past, there was significant youth dependency. This is starting to change. If we look at the demographic profile of the region, the working age population and its share of the total population is going to becoming that much greater in Africa. Many of you will think, why does this matter? Other economies, other regions of the world have also been through this demographic transition. When that happens, typically it tends to be associated with a rise in consumption, productivity gains as you get this bulge from the working age population, and faster economic growth. But much more than that, the youthfulness of Africa's population promises much consumption growth in the future. If we take an economy like Nigeria today, the 7th most populous country globally, by 2050, Nigeria could well be the 3rd most populous sovereign country globally, after India and China. That is the potential of the region. But it's not just limited to one country. It's not just Nigeria. If we were to look at UN demographic projections all the way out to 2100, take a really long-term view, it's thought that 20 of the 20 most populous countries globally, at least 50% of them will be in sub-Saharan Africa. The point about the demographics is this: Africa offers potential returns to investors based on its youthful demographic, based on the demographic transition, based on this growing share of the working age population as a percentage of the total population. That potential is really unmatched by other regions. Africa is younger. Africa has the potential to grow faster. Now, as I speak to you today, we've just come out of the COVID crisis, and many of you will have seen many of the downbeat headlines. There is a real issue to the extent that vaccinations, the speed of vaccinations being administered is determining the pace at which economies can open up. And we know that affordability issues do constrain the outlook in sub-Saharan Africa. But leaving that aside for now, I'd like to talk about what drove growth in the past. We know that since around 2000, 2001, Africa's economic growth had accelerated. Africa was outperforming the global average. For a long time, many economies in Africa, this was especially true during the Cold War, had been relative laggards. They just hadn't demonstrated the growth that they had the potential to demonstrate. What changed? There was an embrace of greater pluralism in the 1990s. We started to see more competition in the political space, more multipartyism, more frequent elections, voters being able to hold to account different governments. And the record in terms of the economic reforms that accompanied this was very favorable. We started to see a rolling back of the so-called overextended states in Africa. We started to see a reduction in fiscal deficits. Inflation fell to single digits. Interest rates were allowed to come down to much more reasonable levels. And this provided the boost to private sector growth that the region hadn't seen in a long while. Now, it's also true that over this time, we started to see the rise of China. This was after China's WTO accession. There was strong demand for the commodities that African countries were producing. But we think it's important to underscore that as much as the external environment for Africa was favorable at the time, a lot of the boost to growth came from domestic consumption itself. Not only a very youthful demographic, productivity gains, the adoption of new technology. Some African countries, Kenya springs to mind, became world leaders in the adoption of mobile money. Even today, there are over 2,000 mobile money accounts for every 1,000 people in Kenya's adult population. That is a very significant development. And as we saw more of Africa's population being financially included, this allowed the scope for so much more growth to happen, for productivity gains, as our largely rural populations started to shift to urban centres and started to take on the functions of urban populations. All of these features are the longer term drivers of African growth. And our expectation is that, leaving aside the interruptions of the COVID crisis, many of these long-term features, these long-term drivers of growth, are likely to manifest themselves again in driving accelerated African growth in the future. For the moment, though, we do look at a region where growth prospects are going to be more subdued. The IMF recently released its regional economic outlook for Africa and said that at 3.4%, Africa may well be the slowest growing region in 2021. We take a slightly different view. As a result of the COVID crisis, we know that there was negative growth across the region as a whole, driven by the performance of its largest economies, South Africa and the two oil-producing economies, Nigeria and Angola. But 1.9% as an estimated contraction in 2020, well, it could have been a lot worse. And part of the reason why the estimate, the IMF thinks growth of 3.4% is possible in 2021. At Standard Chartered, our own view, based on the economies in which we operate, is that we could see average growth of 3.5%. Part of the reason why this is relatively subdued is that outside of South Africa and a select few other mining economies such as Botswana, most of Africa was spared the really, really deep contraction in economic growth that came with COVID. This does not mean that there was no development aspect to it. We know that for the region, part of the problem is that compared to the rest of the world, which is opening up faster, which has seen greater access to vaccines, which is less hampered by the affordability issues of being able to get vaccines to a majority of its population, other regions in the world are likely to open up faster and will therefore see a more rapid bounce back in growth. For sub-Saharan Africa, as things stand now, there are many economies that may not see significant administration of vaccines, that may not see the inoculations of around 60% of their adult populations until at least 2023. But this does not mean that there is no growth or that there are no opportunities for foreign investors in the interim. COVID certainly brought about a significant amount of challenge to African economies. At the outset of the crisis, many of us long-term observers of Africa were very concerned about a region where healthcare provision had traditionally been weaker than elsewhere, and the upside surprise, to the extent that there could be one as a result of the COVID crisis, was that we didn't see an even worse economic fallout as a result of the coronavirus. Some would attribute this to the younger demographic in Africa, making it that much more resilient. We also think that epidemic preparedness, what African countries had to contend with through the Ebola crisis, really helped in terms of the protocols that could be put in place. And if we were to take a big picture view, stepping back, the fact that we are talking about developing countries where so much economic activity is concentrated on services, and so much of that, especially in the informal sector, requires contact. It's the surprise, the positive surprise, if you like, is that we didn't see an even worse contraction in 2020. The good news is that by the end of the year, economies like South Africa, like Nigeria, were surprising positively with their growth trajectories. Now, in South Africa's case, this had a lot to do with the demand for commodities. China was growing strongly by the end of 2020. Not only had China seen positive growth over 2020, but for some observers, the economy was in danger of overheating. Growth was so strong. And we were seeing the impact of that in the commodity demand from South Africa for what's the commodities that South Africa produces. But we think that there is a longer term feature at play here. It isn't just about the cyclical bounce back from the crisis. As the world economy recovers from the COVID crisis, there is a focus on how to do things differently. There is a focus on how to build back with a greener economy. We know that renewables will become that much more important. And a lot of the commodity demand that we're seeing for the commodities that different African countries produce right now is very much related to that green transition. Restrictions on emissions will mean that much more demand for the platinum group of metals, something that South Africa dominates the production of. Demand for renewables, the shift towards using more renewables will create that much more demand for copper, and the region's copper producing economies will be able to benefit. So in looking at the recovery from the COVID crisis, in overall terms, we know that even though Africa seemed to have been spared, at least on the face of it, a much more severe health crisis, it wasn't unfortunately spared the significant economic fallout of the crisis. And the threat of COVID has not gone away. Many economies face the threat of a second or even third wave at this point in time. Kenya has had to put in place new restrictions in 5 of the most affected counties. Elsewhere, there is a risk of new COVID containment measures being put in place. But the good news is that whatever new COVID containment measures are necessitated, they are this time around that much better targeted. It's pretty much true the world over that even as new measures are put in place, they still manage to preserve a greater amount of economic activity. And this is important. But there's no getting away from the fact that for many African countries, the impact of the crisis meant that they saw a sharp deterioration in fiscal revenue, that this led to higher levels of public debt. In many instances, public debt had been growing much faster than many investors would be comfortable with. And there's been very little monetary space to keep on cutting interest rates, given that part of the consequence of the COVID crisis was rising food prices, increased supply bottlenecks, increased pressure on inflation in a region that had had a very brief history of having contained inflation. So what are the key macroeconomic variables that we're looking at in Africa right now? Many central banks were able to ease policy to the extent that they did last year. Our belief is that process has largely come to an end. But we do think that policy will remain accommodative, that central bankers will not necessarily be in a hurry to raise interest rates. As much as the inflation picture allows, they're likely to look through near-term shocks. The full emphasis is on helping economies to recover, to get over the shock that COVID has resulted in. In terms of exchange rate volatility, this is also important. When we do surveys of foreign investors in Africa, one of the key drawbacks associated with investing in the region is foreign exchange availability or foreign exchange volatility. And it's true that in 2020, we saw a significant amount of foreign exchange volatility. In March, April, investors were withdrawing from all emerging and frontier markets. This was associated with heightened volatility. Nigeria saw the double shock, if you like, of seeing oil prices collapse as a result of the COVID crisis, and also saw the strains on its domestic economy and domestic economic momentum as a result of the containment measures that had to be put in place. Kenya, early on in the crisis, was hit externally in a way that very few of us could recall. Remittances, now recovering, were down initially. Horticulture exports were hit very hard as Europe went into a lockdown. Tourism will take some years to recover. And for a while, it looks as though there would be a lot more strain on the Kenyan shilling. Well, if we were to take a snapshot of African countries today, we would see a very different picture in terms of foreign exchange trends. There has been a significant stabilization. In Kenya, the receipt of IMF financing more recently, the fact that investors the world over are looking for higher yielding markets in which to invest means that the currency has stabilized. The South African rand has done a lot more than just stabilize. It has actually strengthened right back to pre-COVID levels, driven by investor demand. Some places, looking at Nigeria, remain a difficult location in terms of the availability of foreign exchange. And the panel, no doubt, which my colleague Keo will be on, will discuss this in more detail. But we do believe that central bankers are starting to address the issue, and we're starting to see signs of an imminent improvement in the availability of foreign exchange as oil prices start to reflect some of the recovery. What about fiscal policy? In Africa, unlike a lot of other developed economies, there just wasn't the space for governments to start spending a lot more. We did see deficit deterioration. We saw fiscal deficits widening. The key driver of this was the fact that revenue had collapsed in many instances. The good news is that already plans are being put in place to try to recover from this situation. Everyone is very careful to adopt what's called a growth-friendly fiscal consolidation. It isn't going to be possible in the very near term to see revenue recover automatically, but already there are signs that we are over the worst in terms of the crisis. And the hope is that by being more efficient in spending, by looking at avenues for longer term revenue mobilization, that most of the important African economies have started to see a turnaround, and that going forward, governments are going to be focused on reducing the risk of excessive debt levels by focusing on how better to raise revenue. For the commodity producing economies, of course, the good news is the support to prices has already provided some revenue upside. Nonetheless, many of you, as either investors in Africa or potential investors in Africa, will read a lot about the region's debt issues. And one of the solutions that was put forward during the COVID hit year of 2020 was that for eligible low-income countries, there should be a debt service suspension initiative. This was signed off by the G20. For countries that signed up to it, they were offered, this has now been extended, debt service relief, a freeze on the debt service payments that were meant to be falling due up until the end of 2021. Now, this has provided much needed liquidity relief, but it's worth noting that not all the countries in the region could benefit from this because it was only made open to those low-income beneficiaries. Also, it's also the case that many countries that could have been eligible decided not to opt for the G20 debt service suspension initiative because they were afraid that private sector investors would somehow feel that they had to be included in this and that this would create complications in terms of the ability of those countries to borrow from the markets. The good news for many economies in the region is that we seem to have gone beyond some of the initial solutions that were offered in reaction to the COVID crisis. We're not just looking at short-term liquidity relief. The IMF now looks likely to be signing off on an increased Sdr allocation for all of its member states. What this will mean is that different countries, all of them IMF members, will see a boost to their foreign exchange reserves in a comfortable position and may not need the boost to their reserves themselves. The thinking about what to do with their Sdr allocations, the debate around this continues, but what we do know for African economies is that this liquidity relief will be all important. Having been subject to the external shocks that accompanied the COVID crisis, we know that one of the region's long-standing vulnerabilities has been the availability of foreign exchange. And to the extent that there is a global multilateral solution in place that increases the foreign exchange reserves of different African countries, this can only be a positive for liquidity, a positive for growth, a potential positive for investors looking to invest in the region. Now, where do things stand at this point in time? We know about the long-term potential of African economies, and we also know that it's been a case of growth interrupted. There will be what we're calling a technical bounce in growth in 2021. Many African economies will grow faster in 2021 simply because they're not as deeply impacted by the COVID shock. But that growth should not be mistaken for a longer term sustained experience which helps to draw in more investment. That will not happen on autopilot. But the good news is that in economy after economy, we are seeing the adoption of reforms that is aimed at creating a more solid foundation for future growth. There is a focus on revenue mobilization. One of the unexpected advantages of the COVID crisis was the embrace of digital. I have already spoken about how countries like Kenya are a world leader in terms of the digital economy. African economies have always shown a significant tendency to leapfrog existing technology. We see it with the spread of mobile phones. We see the potential in new ways of reaching out to the population, new methods of financial inclusion, and building on the digital economy will provide one of the most significant growth engines for African economies in the future. Africa is a young region. It is also a region that embraces innovation and newer ways of doing things. And nowhere do we see that more clearly than in the digital economy. As we try to build back better with much more of a focus on climate adaptation and new ways of doing things, Africa also stands to be a leader in this regard. Not only are we seeing demand for those commodities that are going to be key to that climate adaptation, but we also know that there has been a significant power sector deficit in the sub-Saharan African region that has held back growth for many years. As governments try to overcome the impact of the COVID crisis, there is going to be that much more of a focus on innovative financing solutions, on public-private partnerships where they can't afford to put the investment in place themselves. And there's going to be a focus on building back greener. Africa has vast renewables potential, but a significant power sector deficit. All that is missing is the investment to realize the potential of this region. And finally, a very important reform that no mention of sub-Saharan Africa should leave out. On January the 1st, 2021, an important development took place in the region. We saw the establishment of the Africa Continental Free Trade Agreement. Now, it is true that Africa has seen the lowest level of intra-regional trade of any developing region, around 14%, rising to about 17% of trade at the highest. And the reason for this is that so much of the region's infrastructure, having been built in colonial times, was much more about producing commodities, taking those commodities, selling it to the rest of the world. There were very few trade complementarities, even between neighboring countries, and even less of the enabling infrastructure to make that trade possible. What has changed now is that Africa's political leaders have signed up to an agreement where they agree to dismantle 90% of the tariff barriers to trade within a period of 5 years to try to boost intra-regional trade. There is also, as part of the Africa Continental Free Trade Agreement, a willingness to deal more decisively in dealing with non-tariff barriers to trade. A cynic might say, so what changes? This is happening in the middle of a COVID crisis. There's very weak trade complementarity. African countries don't trade much with each other, with the exception of East Africa, and are they really likely to start doing so? But somebody thinking more holistically about the potential for this would realize that the Africa Continental Free Trade Agreement, while it will not achieve change overnight, nonetheless puts in place the building blocks for a different kind of trade reconfiguration to occur. So not only are we seeing, as a result of the COVID crisis, governments addressing the efficiencies in spending, having to find more efficient ways of doing things to preserve the space for much needed infrastructure investment. Governments will pay that much more attention to the business environment. How do they become more investor friendly? How do they create the conditions that are conducive to more private sector investment? It is clear after the recent fiscal crises that governments can't be doing this alone. The success of Africa's growth trajectory in the future will depend very much on how these reforms play out. So in conclusion to this presentation, I would say we all hopefully know about the region's long-term potential. Given the importance of African demographics to global GDP growth, we know that Africa will emerge as a center of demand that will boost global GDP in a more significant way in the future. But there is a transition that is ongoing right now in terms of helping the region to recover from the effects of the COVID crisis. The bad news, as we know, is that it could be a long drawn out process. In terms of vaccine administration, we're looking at 2023, 2024, before things come back to normal, before normalized economic activity can take place with any sense of certainty. But the good news is that this isn't happening in a static environment. The good news is that in country after country, we are seeing the adoption of economic reform, the willingness to do that much more to create the conditions for longer term growth, which sub-Saharan African economies are seeking. I will stop there with the formal presentation and very happy to take any questions that you may have. My colleague Beza will be helping me in case we need any translation with the questions coming through. Thank you.
Thank you, Razia, for the presentation. We have no open questions as we speak at the moment, but we can start our panel session. Should we have any questions regarding the macroeconomic environment, we would kindly invite you to the session to address those questions. Thanks again for this impressive presentation. Good afternoon and welcome to our panel on Africa Outlook 2021. My name is Beyza Çelik. I'm from Corporate Banking at Standard Chartered Bank Turkey. I would like to first of all thank all the speakers for their opening remarks and their valuable insights. It's great to hear their aspirations on Africa and very proud of what has been achieved so far in trade and economic cooperation. Africa presents high potential in view of its demographic profile. The fast increase in population turns out into new demand for investment in infrastructure, power, goods, and services. Today, we are going to hear from our distinguished panelists about different dynamics of the countries in the region. A few housekeeping notes before we start. You will be able to send in questions to our panelists by using the Q&A button on your screen. I would like to also kindly remind you that our presentation does not constitute any advice or recommendation for investment, but gives an overview of the market environment to the best of our knowledge. We kindly request the audience to avoid any questions regarding the activities of Standard Chartered in Africa. With that, I would like to leave the floor to my colleagues from Standard Chartered, dialing in from Nigeria and Kenya, to introduce themselves very briefly in a minute, and also tell us about one fast, interesting fact about Africa. Keo, over to you now. Thank you.
Thank you very much. Lisa, thank you very much. My name is Korede Adenowo. I'm based in Nigeria and I look after the West Africa business as well as Central Africa, which means anywhere from Nigeria all the way to Senegal. So Gabon, Cameroon, Nigeria, all the way to Senegal. The entire ECOWAS region as well as the CIMAC region, which is the Central Africa region. Interesting fact about Africa that I can give to you. 54 countries, 1.3 billion population, and 2.6 trillion GDP. So I think that's mouth-watering enough to attract anybody into this market. Thank you very much, Beza, and I'll pass it on to Biju, or Teji, sorry.
Thank you, Keo. My name is Teji for short. I'm based in Nairobi, and I look after Standard Chartered's global subsidiaries business for all the 15 sub-Saharan markets that we are present in. I've been with the bank a little over 20 years and have been based both in West Africa and East Africa. And I can tell you, while the outside world tends to look at Africa as one homogeneous whole, the reality is East Africa is significantly different to the composition in West Africa. The one interesting fact, perhaps I can talk about languages. So the interesting fact is that over 50% of the world's French-speaking population actually lives in Africa. And another interesting aspect of languages, there are more Portuguese-speaking people in the country of Angola than there are in Portugal. So I hope, Beza, those are interesting enough facts. And as Keo said, Africa has some very, very attractive demographics, resources, and we hope to talk about that. With that, I'll hand over to Birju.
Yeah, hi, thanks Teji and Beza. My name is Birju Sangrachka. I look after the corporate and commercial bank for East Africa and Kenya, and that's Kenya, Uganda, Tanzania, and Ethiopia, based out of Nairobi. I've been with the bank for coming on to 22 years in various capacities, and have worked across Africa and the Middle East. Interesting fact. So in the 1970s, an idea was mooted for something called the Great Green Wall. The Great Green Wall effectively was an idea to grow trees from Djibouti on the eastern side of Africa to Senegal, one of Keo's countries on the western side of Africa. 8,000 kilometers of trees, 16 kilometers wide. And the principle was quite simple. It was to stop the spread of the Sahara Desert from going further south. Now, with all these things, there's a good news and there's bad news. So in 2007, it finally took off. So from the 1970s, it took a long time to get off the ground. Under the auspices of the African Union, it took off. What's happened since is it's had a mixed bag of success. What they found was in many parts along that belt from Senegal to Djibouti, there was nobody living there. So the trees died. Nobody looked after the trees. But what came out of it was new farming practices and better land use. And those have been put to test in other areas. So what's happened since? Ethiopia, which is one of the countries I look after, has a stated intent of growing, planting close to 5 billion trees by 2024. And for a country that has lost 98% of its forest cover in the last 50 years, that's pretty ambitious. And Kenya itself has proposed to plant 1.8 billion trees by 2022. So, you know, I'll talk about sustainable finance later in this panel, but I think it's very, very powerful that the continent of Africa has made such ambitious plans on tree planting and has inspired countries like Pakistan, India, and China to follow suit. So over to you, Beza.
Thank you, Birji. All very impressive facts, actually. We will remember them all. Thanks a lot. Just as an introductory question, for new entrants, could you please share with us what difficulties typically foreign investors have experienced in Africa? What are the key problems that they have encountered? How did they manage to mitigate their risk? Keo, over to you.
Thank you very much, Beza. The first few bottlenecks, one, volatility, two, regulation and volatility of regulation and inconsistent regulation, policy inconsistency. You can talk about multiple taxation, and you can talk about probably currency instability. And what are the mitigants typically that most of the businesses, put in place? I think the first thing is, if you're investing in Africa, invest for the long term. Those who are reaping from Africa are those who are here 10, 20 years. The days of a 2-year or 3-year cycle, you make high returns and you're out, those days are over. So you must be here for the long term. a 5, 10, 20-year horizon, the returns are much higher, than in the West. But at least by the time you look at the valleys, the mountains, you have an even, spread of opportunities. So the first thing is you're here for the long term, you're here for the long haul. The second mitigant is I would always advise have a local partner. Have a local partner who understands the terrain, who can create access. And I guess it's probably the same for most of the markets, but it's even particularly more important. And you can avoid lots of bottlenecks and hurdles, for Africa. So have a local partner, that would always help. Another point is utilize global names for your banking, global names for in terms of consultants. So utilize consultants, the global names who understand Africa, who understand Europe, and they understand the regulation, they understand policy, they also can forecast because they've been in the market for a while. So those three should actually put you in a good state to actually mitigate the potential risks that I had earlier mentioned. Thank you, Beza.
Thank you, Keo. Very, very helpful. The audience would be pleased to get your views about which countries are likely to be most receptive to Turkish investments. Where do you think Turkish companies might have an edge? Over to you, Teje.
Thank you, Beza. I think before I give you a perspective on which countries might be most receptive, let's just take a good scan of the countries in sub-Saharan Africa where Turkish investment is already quite prevalent. So I think if you look at West Africa, you'll see that in Sierra Leone, in Senegal, in Ghana, there's already quite a lot of Turkish investment that's prevalent. We also see in Tanzania and increasingly in South Africa and Kenya that there is reasonable amount of Turkish investment that's present. I think, and it's present not just in one sector. The good news is that it's present across a variety of sectors. We've seen Turkish investments come into the space of power and utilities, in providing emergency power in West Africa particularly, in building now renewable power for which, there's been sizable projects and awards in South Africa, in the construction sector in Africa, and also in the retail sector, in clothing, in retail, in fast-moving consumer goods and consumer durables in East Africa. So, and we heard from Razia's presentation, we heard from Mr. Abdullah's presentation earlier, that Africa as a continent needs massive infrastructure investment. So in speaking to the countries that would welcome Turkish investments, clearly the area of power, utilities, and infrastructure would remain the preeminent sector. And one of the big beneficiaries of Turkish investments and Turkish presence has been Ethiopia, in building out the railways, in some of the largest construction projects that have been taken up in Ethiopia. However, I think in the evolving nature of what has also been spoken about, we are seeing Africa's move towards renewable energy. And therefore, in the power and utility sector, the focus is towards those companies that are able to execute renewable contracts, are able to provide LNG-based renewable services as an example. And I think that's where the Turkish companies do have an edge. They have proven track record in providing emergency power. And I think they have strong credentials in building and in operating renewable power plants for a number of countries that are looking at diversifying their power mix away from thermal power. But also, I think we were constantly reminded that Africa is very, very young and, very diverse. So therein lies the opportunity for Turkish consumer durable companies. And I think we're starting to see partnerships getting formed where Turkish consumer durable companies manufacturing washing machines, manufacturing other electronic items, are starting to make a name for themselves as quality providers of these products and at the right price points. So I think in summary, Turkish investment would be welcome across the continent. And in fact, I was quite surprised to see that Turkey has over 42 embassies across the 54 African countries. So it means that already Turkey is quite well prevalent and recognized in the commercial space. And so what's needed is to hone in on the specific niches across these sectors that I mentioned. We also see that the Turkish Airlines flies to a number of destinations in Africa and is seen as a very good enabler of services and travel. Of course, with COVID, business travel has come off. So I think already there is quite a good spread of Turkish corporates, and I think this is only bound to increase across these other markets. Back to you, Beyza.
Thank you, Teji. Thanks a lot. As we all know, PPPs are a live theme in Africa, especially in Kenya. Given that the government debt levels have gone higher, how much are we seeing government reforms and how much urgency there is for governments to focus on PPPs? Are there any sectors that you think will become more important in this space? Over to you, Virgil.
Okay, thanks, Beyza. So let me just answer this in this way. The PPPs are not new to the African continent. They've been around for a long time. Now, two things. One, they haven't been very successful in most of Africa. Other than outside South Africa, there's very few examples of very successful PPPs. But that said, they have been successful in other parts of the world, and it's probably time that many countries in Africa started re-looking at their PPP frameworks to see whether these can be re-looked at. And why is it important now? Razia talked about increased debt levels. Beyza just mentioned increased debt levels. But the one thing is, in the traditional PPP model, everybody wants a government guarantee to backstop, the PPP project itself, or demand risk, if you like. That's not going to happen because more and more, the IMF, for example, is asking for inclusion of such sovereign guarantees in the overall debt portfolio, on the debt calculation. Therefore, having a PPP with a government guarantee, I think that model will change quite rapidly. And what we're seeing is, for example, a government guarantee being replaced with a letter of support from the government rather than a formal financial obligation. That's one. The second reason why PPPs are becoming more important is the pandemic has created an opportunity for a reset and for us to build back better. It's created the need to accelerate opportunities that will have impact. And the last piece, again, quoting Razia, is we've seen an increase in foreign currency volatility. We've seen an increase in country and political risk. And PPPs are a way to mitigate some of that, especially if you can bring in blended finance. And I'll talk about that in a minute. So let me use Kenya as an example and how they're trying to reform the PPP process. So here's some snippets. The PPP Act was enacted in 2013 in Kenya. And between 2013 and 2019, there was only one successful PPP project, which was a renewable wind power project done up in northern Kenya. So 6 years with one project is not a lot to show. So what they're currently doing is they're rewriting the entire PPP Act. It's going through public participation right now, and hopefully will become law soon. Part of it is going to be able to fast track some of the aspects of PPP. So, for example, we find that as financiers, when you do a PPP project, meeting the CPs so you can get to financial close, that just takes forever. And what the PPP Act will look to do is bring all the parties to the table to try and clear, and all the different government departments together to try and clear some of those CPs so that financial close can be attained sooner. The other one is it's not just projects that the government tenders. they actually have a mechanism whereby if you have an idea for a PPP, you can take it to the PPP directorate and ask for them to evaluate it and see if it makes sense and fits in with their agenda. And they will look at projects that are single sourced, i.e., if you have an idea that you want executed. So it's quite a clever area. And so some areas where they're focusing, affordable housing, sustainable infrastructure, energy. Somebody talked about not enough power, but energy, water, sewerage, roads, the usual stuff is areas they're focusing on. Back to you, Basil.
Thanks a lot, Birju. Razia has touched on the impact of COVID on Africa, but it would be good to have your views as well. Till the COVID crisis has happened, what impact did it have on Africa? We know that the vaccination drive has been much slower than the developed markets. How long do you think it will take for Africa before the market returns to growth? Which sectors are likely to be most important? Keo, over to you.
Okay, thank you, Beza. Now, if you look at the stats of vaccinations, I think Africa has done about 14 million doses, right? The United States has done about 200 million doses. Having said that, the Africa population is about a billion, 1.1 to 1.3 billion people. So yes, comparing 200 million vaccinated in the US over 300 population and looking at the Africa story, we have not been super successful, in terms of vaccinations. But then when you look at the confirmed cases, Africa has or had about 4.4 million cases, and the US had about 31 million cases. So the epidemic is more muted here, than in the West. For reasons scientists are not yet really sure of. Neither have we seen any research, to let us know what it is. Now, with that background, growth expected, according to the Africa Development Bank, is about 3.4% in 2021. So the growth has started already. We're already seeing it. Activity has started, growth has started, business is moving on, people are observing protocols, but right across Africa, you can see that people are getting on with business. And so that is why the international agencies are forecasting about 3% growth for Africa. The areas where we believe there will be lots of focus, 2020, 2021, FMCG was super successful. And you can hear that from the different speakers. FMCG has done very, very well. And we expect that to continue 2021 post-COVID. Of course, telecoms, data, penetration, we expect telecoms to continue in an upward trend. Now, those areas that were beaten and battered, of course, hospitality, tourism, entertainment, that had negative growth, we expect those to actually shoot up. Tourism, for example, some parts of Africa, the focus growth is about 6 to 7%, for tourism, hospitality, entertainment, because of course they bore the brunt of the pandemic. And of course, no prizes for guessing, infrastructure. We expect huge growth in infrastructure, power and utilities. So a lot is expected in infrastructure, especially power and utilities. So that is what we see in 2021 and beyond. Over to you, Bezia.
Thank you, Keo. As we all know, China has always been a big player in Africa, very active in the continent in terms of Belt and Road projects. Is China being looked differently after COVID? Does this open up opportunities for other businesses to do more in the region? And what do you see China be doing going forward? And what does it mean for investors from other countries? Over to you, Teji.
Thank you, Beza. I think a lot has been said and written about China and Chinese investments in Africa. But primarily, if you look at Chinese investments across the continent, the Chinese investments have followed the deficit in infrastructure. It's estimated that Africa needs to build roughly between 70 or needs to attract between 70 to $90 billion of infrastructure investments on an annual basis for the next several years. That's one of the gaps that the Chinese investment has been helping to come in and plug. And that's why it's been seen as being quite successful. But there are limits and boundaries to how much more Chinese investments can come. And one of the enabling frameworks for Chinese investments, particularly from their state-owned enterprises, has been the ability of Chinese developmental financial institutions to back up these investments. We are today seeing across the continent a number of these developmental financial institutions almost having reached the peak of their risk appetite for African assets. And therefore, there is clearly a need for some diversity. And this is clearly an opportunity for other investors from other regions to come in. It doesn't mean that China does not have the wherewithal, but we just think that there will be the opportunity for other investors. And it also means that it opens up the possibilities for investors who bring in investments not only by way of financial capital, but by way of human capital in the transfer of skills, technologies. And these are important critical areas for a lot of governments. Local content, transfer of skills and technologies is a key agenda item for a number of sovereign countries across Africa. So I think that clearly presents an opportunity. And I think that is an opportunity irrespective of whether there is Chinese investment or no Chinese investment in Africa. The other aspect, and I think here in particular, the Turkish investments have been quite successful, is been in the area of emergency power, renewable power, and providing skills upgradation and legacy infrastructure upgradation in the power generation sector. So I would think that this will continue to present opportunities for Turkish and other investors, coming into the near future. The Chinese investments have also been very big in mining and telecommunications. I do see that these are two sectors which will continue to receive more Chinese interest, because they're able to compete effectively basis a lower operating cost model and also in terms of speed to market. So naturally, any investor looking to come into these two sectors will have to contend with those two entry barriers and will need to work through the demand equation, where China has substantial demand back home. So most of the copper mined, for instance, can be taken up given the variety of new sources that are emerging, and Razia mentioned some of that in her presentation. But I think the other area to think about is really investors who come in and crowd in investment through participation across a plethora of country regimes. So for some of the larger infrastructure projects, it's very difficult to get long tenor financing if you focus the financing only on one specific market. So the need of the hour, and we've started to see some of these projects take shape. The African sovereigns need long tenor financing. They need lower cost financing, which puts less burden on their budgets and their fiscal performance. And in that regard, the use of export credit agencies across a range of European nations is a model that we've started to see more and more active, across a few African countries. I would think that will pick up more substantially after COVID. The area of healthcare, naturally, in pharmaceuticals is very key. Given its young population, given its attractive demographics, The pharmaceutical companies, which used to look at Africa predominantly as a market to export into, are starting to see the potential of setting up some of the generic manufacturing facilities. So we've seen investments come in from Europe, we've seen investments come in from India and from Bangladesh in pharma manufacturing across East and Western Africa. I would think that these are again areas that will pick up. So China will remain relevant to Africa, in my opinion. But I think there is enough and more opportunity for investors from the other markets to come in and to occupy some of these other niches. Thank you, Beyza.
Thank you, Teji. Good to hear this from other opportunities for other countries, obviously. With COVID, sustainable finance has become a big theme. How can the Turkish companies play a role in emerging sustainable finance theme in Africa? What sort of sustainable finance solution can corporates look for? And are there any examples in this space that you can share with us, Birju? Thank you.
So Beyza, the challenge with sustainable finance in the way it's defined is that it has a very tight definition. You have to measure the impact of the financing. There has to be disclosure around it, etc. So sustainable finance. When I talk today, I'm going to use the loosest possible definition and not the way it's looked at globally. So let me just start. We did a survey, a report. Sorry, we released a report last year called Opportunity 2030, and we looked at just 3 of the UN Sustainable Development Goals around clean water, renewable energy, and sustainable infrastructure. And we found that in 15 of the world's fastest growing economies, this is pre-COVID, and a number of them in Africa, the financing gap is $2 trillion a year. $2 trillion a year, that's not a small number. But when you peel the onion back a little bit, you realize that only 10%, well, okay, first of all, only 60% of that is being raised. And of that 60%, only 10% is getting into Africa. So there's a massive financing gap right now for sustainable finance. Do these sustainable projects exist? Yeah, primarily in renewable energy, but it's something that we're going to have to co-develop with the public sector to bring to fruition. Climate risk. Climate risk is I'm sure you all understand climate risk and the risk of what's happening. COVID has made that even worse. And under climate risk, let me give an example again using Kenya. Kenya has committed to reducing 30% of its greenhouse gases by the year 2030, just 30%. For that, they need roughly $65 billion. This is not a small number. And they're not going to be able to raise that from public sources. The private sector will have to come in. So there's climate risk is alive, and we have to deal with it, but it's presenting opportunities for companies to come in and solve for. Now, let me just move back to the loose definition I was talking about. Where are we seeing potential areas for growth? I've mentioned renewable energy a few times, but I'm not talking about large projects. We've seen small mini hydro type projects. We've seen manufacturing companies looking at putting, 0.5 megawatt. Sorry, not 0.5 megawatt. What am I saying? Yeah, 1 megawatt, 2 megawatt solar plants, just to reduce their energy costs, become more efficient, and support the environment. So there's a huge amount of work on renewable energy. Green manufacturing with a focus on clothing and apparel. Teji talked about white goods. That's potentially one other area. And we've also seen more import substitution where African governments are incentivizing companies to set up locally, particularly things like automotive vehicle assembly. You think about heavy goods like tiles, sanitary ware. That's all coming onshore in Africa, and there are incentives around that. What's growing as well is infrastructure, technology. Keo mentioned telecoms. I think Teji also mentioned telecoms, and I'm mentioning payments. Massive space for growth in the technology area. We've seen some very large valuations in that space. And last and not least is we've seen increased sources of financing. Again, Teji talked about working with ECAs, but blended finance, where we bring together development financial institutions, commercial banks, ECAs, to solve some of these large projects, is on the increase. Bezos asked for an example. I think the clearest example would probably be the standard gauge railway project in Tanzania that was closed by a Turkish contractor, $1.6 billion, a number that is very, very large for a country like Tanzania. But the deal team that worked on it managed to bring that to fruition, bringing together ECAs and DFIs and commercial banks. And the net effect of having a project like that is you're taking trucks off the road and the impact they have on the environment. So there is an upside to some of these things. Beza, back to you.
Thanks a lot. Thanks for the fruitful discussions. If I may summarize our discussions on this panel, you have discussed about new ways of working and new ways of doing things. Also invest for the long term, have a local partner that would help, global relationships, and having consultants. We have heard about emergency power, infrastructure, and the emphasis that you put on has always been long-term opportunities. I would like to now open the Q&A. We have questions coming from the audience. We will try to answer as many questions as we can. The first question is on implications of recent commodity prices. What are your perspectives about implications of recent commodity supercycle on Africa? What solutions can be offered in order to overcome financing bottlenecks on the continent based on commodity?
Thank you, Beza. So maybe if I look at the implications of rising commodity prices, and there is a debate underway about whether this is a new growth supercycle, if it has the characteristics of what we may have seen from the early 2000s on or not. Given our knowledge of China's economy, we do think that China saw a substantial boost to its exports last year, based on COVID-related demand, PPE, as well as with a larger proportion of the world's population working from home, demand for all sorts of electronics. Right now, what we're seeing the world over is as more economies are opening up, we're seeing a surge in consumer spending. We're expecting to see that given the accumulated savings during the COVID crisis. What we don't yet know is whether that surge in demand is going to be long lasting. Is it the case that we will have to contend with the longer term scarring effects of the COVID crisis? Why is any of this relevant to Africa and the commodities question? I think the key with the commodity price uptrend is to look very selectively at which commodities have risen and why. Oil was something of a magnet for all of the negativity around the COVID crisis. People stopped traveling, air flying was down very substantially, and this cut into oil demand. The oil market had seen its single worst slump in demand in the history of oil markets. And what has supported the recovery so far has been a mix of expectations of normalizing demand, although we're nowhere near that just yet, and also OPEC plus production cuts. So with oil, it still seems as though there's a lot of support to where prices are right now because production has been cut back. It's not just a story of demand recovering. And this has interesting implications for African countries. On the one hand, the established oil producers in Africa, many of them OPEC producers themselves, and they are having to contend with the same production quotas. They're going to have to play a careful balancing game. Yes, there's upside to prices, and that's good for Nigeria's growth, But Nigeria is also constrained by its production quota, which means we're not expecting the oil sector GDP to go back to positive levels until at least the second half of this year, given the need to comply with these production quotas. Elsewhere, we have seen commodity prices rising again for very specific reasons. The focus on climate adaptation, the focus on which commodities are going to be in demand as we do things a little bit more differently. So PGMs, this will support South Africa's economy, and also copper prices, which will lend support to those mining producers that do produce copper. The impact of all of this on African economies, unfortunately, it's also the case that many African economies will see greater headwinds because of rising oil prices. For the likes of Kenya, for example, for South Africa even, if oil prices go up, we typically see that as a rise in the import bill and more of a negative influence. In this case, though, given recent appreciation of the South African rand and the Kenyan shilling, it's clear that markets are focused on more than just the commodity price shock. On the financing element of the question, very happy to hand that over to my colleagues.
Thank you, Razia. We have another question regarding specific countries. Apart from developed regions mentioned previously, such as Kenya, Nigeria, South Africa, what are the rising stars, rising countries in the continent that might offer opportunities for financial players and infrastructure energy investors?
Yeah, if I can just basically take a crack at that. So talk about East Africa. We've seen increased demand for particularly opportunities in the energy and infrastructure space in Uganda. Tanzania remains a market with huge potential, and with the change in president there, there's been a renewed push on some of these projects that had stalled for a while. You know, and you think about what's happening in these regions, the oil or the gas that's been there for a while is getting to a point of commercialization. There's massive opportunities that will come around that. The other point is in Kenya or even in Nigeria, the requirement for local content on some of these large projects is coming to the fore. Nigeria has had it for a long time with their on the oil sector. In Kenya, for example, today there is no government project that happens without a local content component, and it's part of the scoring whenever a Turkish investor is looking to put a project in. So I think to answer the question specifically, Uganda, Tanzania are interesting opportunities. Ethiopia is going through a bit of a rough patch right now, especially with their renegotiation of their debt under the auspices of the IMF and G20. But we think Ethiopia still remains a very large country with promise. So just watch it over the next year and a half. It should pick up again. Keo, maybe in West Africa you want to comment?
We can connect to Keo later on. We have another questions. We have another question from the audience who has been in Nigeria and South Africa before, and the challenge is said to be the security basically and finding a reliable partner. How and he's asking for solutions to overcome the difficulties. Any suggestion? Thanks a lot, Teji.
Yeah, Beza, thanks. I'll happily take up the one on South Africa, and Keo can answer the one on Nigeria. You know, clearly there are some security challenges in South Africa, but these are security challenges relating to very often, certain break-ins, petty theft crimes on the street, which are in a way unique to South Africa. And if I can try and draw any comparison, these are not possibly unfamiliar situations compared to some other parts of the world as well. And with the right security protocols, we have seen that South Africa has a very robust security industry. In the private sector space, these are security specialists who offer guarding, evacuation, protection, security analysis and evacuation services, and who can really be employed in terms of giving comfort, doing the security assessments, and in making sure certain security protocols are well maintained. I think the security industry in South Africa is quite well developed and enhanced, and we've seen a number of our customers use the services of such security consultants. So I think, Beza, what we can offer to do is to clearly link up, our experience in this area with any potential Turkish investors who are looking to get more detail and to put them in touch. We are aware of a number of security consultants and would be happy to facilitate that introduction. So I hope that's helpful. I think the other element really is, and this was touched upon by Kyo earlier, in terms of relying on local partnership and trying to go in coordination with somebody who understands the local market very well. So to that extent, of course, if there is an investment being proposed in South Africa, there are certain rules and guidelines. And again, local partners can provide very helpful oversight and financial incentives for such investments in addition to security. So I hope that helps. And perhaps, Beza, we can follow afterwards.
Thanks a lot, Teji. That's very helpful. We are running out of time, so I would like to request the panelists to share with us their final remarks before we close. Over to you, Keo.
Okay, so I think on the whole, it's one, there's opportunity. Two, there are reasonably higher returns than in other markets. Three, the population is there. And four, it's a high growth geography. It's a high growth environment. And so it's an opportunity for Turkish businesses to come in, one, give their expertise, give their technology, work with local partners to actually further their interest and actually grow their business overall. On that note, I'll pause and I'll say thank you very much to DEİK. Thank you for having us.
Thank you, Keo. Teji, your final remark, if we
thank
can
you.
have.
I would just like to echo, some of the points Keo said, and I just like to reiterate that Africa is changing. Africa is ready to adapt new financing methods. It's ready for new investment corridors, and it is very ready to take on some of the more modern structures, both in terms of financing, technology, and in catering to the demands of the growing population. So in summary, I think choosing your markets well, researching well, and working with partners who are present on the ground and know the markets well is going to be some of the ingredients for success. And I wish all our participants, the very, very best for their investments in Africa. And thank you for giving us this opportunity. Thank you. Thank you.
Thank you, Teji. Over to you, Birja.
Thank you, Beza. I'll actually use a slide that Razia did many years ago. At the beginning of the 2000s, there was a Economist, the magazine cover, the magazine The Economist cover that said Africa, the hopeless continent, or something like that, and it was a completely dark cover, and it talked about all the challenges in Africa. At the beginning of the 2010s, the same magazine, The Economist, had another cover that talked about Africa rising and the promise of Africa. Now, the reason I share these two examples with you is that Africa has its ups and downs, but over time and consistently, it presents opportunities for investment, opportunities for growth, and it needs the investment in growth. And what Turkish investors with your knowledge, skill set, and financing can bring in is help deliver that promise of growth. There will be ups, there will be downs. There's no doubt about that. That's the fun of being an emerging market, as you'll understand. And we look forward to seeing you on the continent. And with that, I just wanted to thank everybody, the organizers as well, and the team at Standard Chartered Bank in Turkey. Thank you.
Thank you, Birju. Last but definitely not least, Razia, over to you, please.
Thank you, Beyza. So reflecting on what many of my colleagues have already said, we know that Africa has been through tough times before. That wasn't enough to stop it occasionally offering the highest returns on investment, given that it was used to these challenging circumstances. These are also tough times for the Africa region, but already, even as we see the growth reasserting itself, we can see strong reform intent. And I think for investors, that creates many exciting opportunities ahead. Thank you.
Thank you, Razia. Thank you all. Today, in partnership with DEİK, we have discussed many aspects of doing business in Africa with Standard Chartered team on the ground. A couple of key takeaways from our discussions. Africa is quite diverse and represents long-term opportunities for investors. Having been hit by COVID, it may take some time till we see the acceleration in vaccination. However, most businesses have adopted new ways of doing business remotely already. We have discussed about PPPs, sustainable finance, what can China be doing going forward in Africa, and also addressed many other questions that you have raised on this panel. For any follow-up questions you may have, you may reach out to DEİK, who may coordinate with us. On behalf of Standard Chartered team, I would like to thank DEİK, all the speakers, panelists, and participants on this call. This now concludes our webinar. Thank you. Have a good day.